Hey everyone, it's Letitia with Barefoot Gardening. I hope that you are doing well. Sorry for the lighting. I just wanted to add a few things to the video before you actually see it. I went to an event last night, and this event was put on by our county soil and water conservationist program. And so I went to an event a couple of months ago called Farm Access. And what they are doing is put on by a local university, and they're trying to share information about how to access farmland, or if you're interested in farming, how to rent, if you do it by renting or buying or whatever. But a lot of people that he is working with in this program are not only people of color, but they are refugees or immigrants. And so anyway, I thought I would just check it out because I just want to learn more about how to access farmland, like what to expect when trying to buy farmland and whatever else they had to offer. So I went to that. Because I went to that program, he offered to teach the accounting side of, marketing your product or your services that you want to offer, if you are interested in that. So we were like, it was just a, group decision, and the whole group decided, yes, we want to know more information about that. So he came back a couple months later, and this is the event that I went to last night. So watch the video. It's a little bit longer than I typically post, but it's good information, and I think you can glean from it if you're paying attention on how to do a cash-based accounting if you're deciding to sell your products. And so how to keep up with the paperwork if you are interested in doing so. So just offering the information for those that are interested. I'm just interested. I want to learn more information, so I thought I'd share. All right, I'll talk to you all later. Love y'all. Bye.
Formula to figure out what the monthly payment is if Sid has borrowed $10,000 at a 10% annual rate for 5 years. What's 5 years? That's 60 months, right? So under P, you would put $10,000. Under MR, you would put 10% divided by 12. 10% divided by 12 is 0.83%. And what does a percent means? Percent, say 5%. 5% means 5 over 100, right? Okay, grade school stuff. 5 over 100. So 0.83% is 0.83 divided by 100, which is 0.00833. That's what MR is. Okay? If you did that, and believe it or not, you can do it in your calculator that's in your cell phone. I know you can do it. I tried it, okay? I made sure that you can do that. You can do it, okay? If you can do it, your monthly payment will be $212.47 per month, okay? So you have to pay $212.47 for the next 60 months to pay off this loan, principal, and interest. You understand that? So now if you do $212.47 and multiply that by 60, you would really know what your total payoff is, okay? Which is a lot more than $10,000, all right? See, that's how you make money, by loaning people money, right? Okay, but the question is, how much of this $212.47 is interest, and how much of it is principal? That thing takes a little bit of work figuring out, okay? And let me show you how to figure that out. It's not hard, it just takes a little bit of work, okay? So, let's see. I guess the best thing is for me to write it over here and you guys kind of follow through. So, this bank is charging an interest rate of 10% per year, right? If you divide that by 12, then the interest rate per month is 0.83%, right? If you don't believe me, open your calculator and do that. 10 over 12, what you get? You'll get 0.83. Okay, so the first month, your beginning principal is $10,000. That's how much you owe them before you make any payment. When you make your first payment, that payment is $212.47. But how much interest have you truly accumulated the first month? The interest that you have accumulated the first month is $10,000, which is what you owe the bank. Multiply that by 0.83%, and the answer is $83. Okay? So if you do the 10,000 times 0.83 divided by 100, I promise you the answer is going to be $83. Okay? That means that when you make that payment of $212.47, $83 automatically goes to interest. So what is left over goes towards principal. So here is what I figured that out for you here. If you stare at this, March, $212.47 is your payment, total payment. $83.33 is your interest. And what is left over? $129.14. That is your principal payment for the first month. Got it? Now, immediately, what the bank will do is they will deduct that $129.14 from your loan. So now for the second month, you don't owe them $10,000 anymore. You owe them $10,000 minus $129.14. Okay? That's $9,000 something you owe them. Okay? So the second month, how will they calculate your interest payment? It is going to be the $9,000 that you owe, multiply that by 0.83%, and now your interest that you owe them in the second month is $82.26. Notice the more you pay your loan, the less your interest is per month. Okay? So the second month you pay them only $82.26, which means out of your $212.47 payment, $130.21, the leftover, goes towards your principal. The third month, they're going to now deduct that $130.21 from the amount of money that you owe them. So you're going to be owing them, very close to $9,000. Okay? And you continue this process. Okay? And by the time you look, on the month number 24, that is 2 years down the road, your payment is still the same, $212.47 a month. You're only paying $60 in interest, and $152 goes towards your principal payment. Okay? And by the time you hit month 60, you'll be paying $0 in interest, and the full $212.47 will go towards principal and will completely pay off your loan. Do you follow that? Mm-hmm. Now, you may say, how do I calculate this? If you want to know, I'll show you later. In fact, I'll tell you a little secret. I'm developing an Excel, it's like an Excel app, okay? And most of these expenses are what are called operating costs, okay? The cost for operating a farm. So the rent, the seeds, the compost, the fertilizer are operating costs, okay? The interest that Sid pays is also considered an operating cost, okay? It is the cost of borrowing money, interest is, okay? But the principal that Sid pays is not a cost, okay? It's like giving the money back to the person who originally owns money. Paying principal in accounting is not a cost. It's like if I borrowed your car and I gave your car back the way it was, okay? That is not a cost to me, is it? Okay? So if you borrowed money from somebody and gave them back the money that you owe them, that's not considered a cost. But the interest that you pay on the loan is a cost to you. You understand? Mm-hmm. This is the reason why every time we make a monthly payment, we have to be able to split it into principal part and interest part and consider only the interest part as a cost. Any questions at this time? So what are the operating costs? So I have made a little list here for March. Rent 500, seeds 50, compost 200, fertilizer 300, and that's 1050. And then there is the interest that I did not include. Notice that the tractor, $2,000 tractor, is not an operating cost. Okay, that comes under facilities and equipment. Notice the irrigation system and fertigator, the $200, it's not an operating cost. That too comes under facilities and equipment, okay? But let's see how much money Sid actually spent out of his checking account. He spent $10,050 plus $2,000 for the tractor, that's $3,050. Plus $200 for the irrigation system, that's $3,250, plus the $1,212.47. So all of this money that he spent came straight out of his checking account, right? So we have to add it all up and we have to subtract it. So let's add it up. Does somebody help? Richard, can you help add this up, please? So let's add these up. So let's see, $500 for rent, $50 for seed, $200 for compost, $200 for irrigation system, $300 for fertilizer and lime, $2,000 for the track tiller, and $212.47 for the loan payment. What does that all add up to?
$34.6247.
How much?
$34.6247.
Yep. Now, go.
Say it one more time.
$3,462.47.
Okay. Now go to your cash account and write March 17 and write farm expenses, and under the amount write negative $3,462.47. So that is the amount of money that went bye-bye from your checking account because you bought all this junk. All right? However, not all of this money is operating costs. Some of this money is capital equipment, equipment and facilities. So which part is facilities and equipment? Let's go back here. Is the tiller equipment? Yes, that's $2,000. Is the irrigation system equipment? Yes, that's $200. So $2,200 is equipment. So go to your facilities and equipment account, okay, which is right below your cash account, okay, and write March 17, and under description write tiller and irrigation, and under amount you write $2,200. Positive $2,200. Remember, in the cash account when you wrote farm expenses, that was negative $3,462, okay? Put a minus sign in front of it. Now, let's look at your operating expenses, and I had made a list for you there. The rent and all of that, they add up to $10,050 operating expenses, okay? Go to your equity accounts, and you see that thing called retained earnings account under equity. Over there, write March 17, under description, write operating expenses, and the amount is negative 1050. Okay? But these operating expenses did not include the loan payment you made. So under retained earnings, write March 17 again and say interest paid on loan, and write negative $83.33. Okay? Because that's also an expense to you, the interest. However, the principal payment is not an expense, so the principal payment was $129.14. So go to the liability notes payable account and write March 17, principal paid, under the amount, write negative $129.14. Okie dokie. Notice now the seesaw balances yet again. At the end of March, how does Sid handle that? Well, the $300, is that going to come into his checking account and make it bigger? Of course. So write March 17, say sales of greens, and write $300, okay? And then on the equity side, go to your retained earnings account and write March 17, sales of greens, and write $300 over here. So you wrote 300 here, and you write again 300 there. Any questions? Okay? So we learned how to handle expenses, we learned how to handle our loan payment, and we learned how to handle revenue or income. Okay? Okay.